The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis, from the country of Asia, including Hong Kong, is where we are, overlooking the South China Sea this morning. Anyway, let's take a look. If you ever want to buy a nice piece of property here of, something in around the order of about, 900 square feet, and you got a couple of $1,000,000, I could probably set you up with something. It won't have a sea view, but you'll like it. Anyway, let's take a look here at this footsie, folks. We've made a really nice butterfly pattern, as you can see yesterday, and with that big wide range down, there was no follow through. That's the important thing. Norm's going to be on. Norm Wincy is going to be on in a few minutes to discuss the influence of Mercury retrograde, which we are under right now. But I think the one thing that we should pay a little bit of attention to today, folks, is what we have going on here in the Dow Jones Industrial Average. This is a daily chart, of course, going back a great deal of time. And I want you to notice here that we had the big wide range. We were down over 200 and some points last night, as Tom O'Brien pointed out. We rallied back to be actually unchanged, which is a good thing. But folks, just take a look at that low we had down there at 23,750. If we go below that and close below that, just good night, Charlie. You'll see that black line that's there. That's telling you you're going to drop to about 22,500. And boy, there's several reasons it could get there without any trouble at all. So the key figure is, if we get down today, I wouldn't be afraid to go short over the weekend, because you're most probably going to see a pretty nasty Monday if we close bad today. Now, the key there is that we have to close badly today. Closing strong today negates all of that. That means we could still be in a pretty good market. But if we close badly today, below 23,750 in the Dow, that would be 26,610, I believe, in the E-mini S&P. So, keep an eye on that. It's very interesting formation here, and there's some other things that I'm going to cover in the newsletter over the weekend that point to this, but we'll watch it unfold. The key today is to close. If we can close strong, looks okay. Close is bad, not looks okay. So it'll be what old Mortimer came into the orange kit. Sell, sell, sell. Anyway, that could be the order of the day Monday if we have a very, very bad close. Today, that's the key. And a bad close is down 300 or more in the Dow. So we'll keep an eye on that. And remember, we live in interesting times, so be careful, because these markets are jumping around. There's plenty of news out there to make them jump around, whether it's a trade war, administration changes, conflicts anywhere. It could be any different thing to make it go down, because they went up very fast. They can come down very fast. We're just having increased volatility, and that's it. The level I'm looking at is yesterday's low, last night's low. I believe it was around 2610 in the S&P. I think that's the key level to keep an eye on. I'm not sure of last night's low. That's the main thing that we want to keep an eye on. So we'll see how this works out. But the Mercury retrograde is a big thing. If you remember back in May of 2015, when the stock market was trading at an all-time high, we had a new moon, and Norm was our guest, and he pointed out the importance of that top because of the Mercury retrograde, and boy, oh boy, did it correct. That was our last big correction before it moved up for 2 years, but that's the main thing. Now we have just the reverse here happening. We've got Mercury into direct action, Mercury action. So we'll see. The downside on the target for the ES, folks, is at 2220, I believe. That's the one that I'm looking at. If we take a look from the newsletter that we were looking at last week, I'll put it up here. You'll see that we're looking at a potential here. And if we break this low, you'll see that we made the number. There's what we're looking at for the week. That we made that level of 23,050. We hit that last night, and now we've bounced. And that's the important thing. What I showed you earlier was the update of that chart. So it still looks pretty good. But if we get down to this level here and break that level, you're going to be looking at 22,650 in the in the Dow Jones Industrial Average, which equates to the S&P, I believe, at the 26. It's down about 300 points, as near as I can tell. I believe it's well, you know what? I guess Larry could actually take a look at it and tell you. So let's just give a quick look here. It'll only take me a second, and I will tell you that number is the our low last night was at 26 what was it, 2617. So if we get below 2617, that number comes in at 20. That number for the S&P with the ABC down comes in down 300 points at 2357. That's around 290 points from where we are right now. I mean, that's a lot, and that would certainly qualify as a very bad day in the market. So keep in mind that could happen. But all we're seeing now in the overnight markets is just normal stuff, folks. That's really what we're looking at. It's just normal things. There's nothing really dramatic to say about it. We've had just really nice normal type rallies, and I'm trying to find the one that I'd like to show you, but here it is. Let's just get it up here, and you'll see that it's repeated itself 3 times again. Let me get this up here so you can see it. That third rally, the last one we just had, should come in at around 2651, and I believe we hit 2649.5 just a little while ago. So watch that level. So we've had three nice rallies here, and they've all been, pretty good, 20-some points. So that's about all you're going to get in a bear market. We're going to see. Okay, the $64. Hey, Norm, are you there?
Yes, sir.
Good. Listen, I know you got a little bit more time on your hand, but why don't you tell the folks what we're looking at here with Mercury retrograde and all this activity? Take as much time as you need. We got about 3 minutes to the break, and we'll keep you afterwards. So go right ahead.
All righty. Do you see my charts on the screen now?
Spot on. It's a Big 10-4.
All right. The first chart I'm showing, I went back about 9 days or so. I was on your show on the morning of the 9th because Jupiter had just turned retrograde. We're going to talk about that's critical to understand that planets going direct and retrograde. For anybody who's new out there, doesn't know about this, due to the relative motion of the planets. We're here on the big blue marble called the Earth. We're all going around the sun at different speeds, and just like driving on the highway at 60 miles an hour, you look at your speedometer, it says 60, then you look out your window, and all of a sudden you have the impression you're going backwards. What happened? Somebody just passed you doing 70. So that's what happens with the planets. So as we go around the sun, we pass planets, they pass us. If we look out at the sky there at night and plot the planets, occasionally, individually speaking, they look like they occasionally stop their motion and reverse their direction. When they stop their motion, that's called a station point. We got music.
We got music. We got to pay a few bills. Stay with us, Norm.
Yep.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're talking with Norm Winsky of AstroTrends. Norm, before you continue, we have a question from one of our listeners. Do you see anything in the charts that think we could go to war soon?
I don't know. I didn't research that. Anyway,
Okay,
just before the break here, we were talking about the relative motion of the planets and how that creates an important point for forecasting the markets. So saying that, if you're driving at 60 and then you look at your speedometer, it says you're doing 60, you look out your window and then all of a sudden you have the sensation you're going backwards by 10 miles an hour, then that's because somebody passed you and they're going faster than you are, and it appears that you're going backwards. Well, if you go out and look at the night sky, the planets going different speeds around the sun? It looks, we pass the planet or they pass us. It looks like on occasion, for a moment, that a planet will stop its motion and then reverse its direction. When it stops its motion, just like throwing a ball up in the air, there's a moment there where the ball's not going up or going down. When it stops, that's called a station point. There's two kinds of station points. One to go stationary direct, when it stops to go forward, or stationary retrograde, when it stops to go backwards. Back now, look at our chart here. We have the Jupiter. Where's my pointer? There we go. There's Jupiter. That looks like a funny 4. That's the symbol for Jupiter, SR, stationary retrograde. That was on the night of the 8th. I went on your show on the morning of the 9th, said I thought we were getting close to a top. Later that was a Friday, and at the close there, we made a temporary top on the S&P. The Dow Jones actually topped the next trading day morning, on Monday the 12th. The S&P went and made a little higher high on the Tuesday, the 13th. Then we topped out. By the way, these station points, my principle there is when the planets change trend, the markets change trend, and these things usually work within one trading day. So there we topped out, and we went down, down, down. Then I was on your show again on the 16th, just ahead of the new moon over the weekend of the 16th. We also had Mars. My other big thing is when the planets get to zero latitude. What is that? Is the planets go around the sun. They also, like horses on carousel, they go round and around, but they also go up and down. When they get to that midpoint of the cycle, sort of even with the sun's equator, that's their highway called the ecliptic, and that's 0 degrees latitude. And when they get there, that's another important energy point. And Mars was right there on the lead on the afternoon, the 16th. Then we had a new moon that weekend, and then we gapped down. Look at this beautiful, you're going to love this. I know you already know this story, but for the folks out there, look at this beautiful island reversal. This has got to be right out of a textbook, right? So you have the reversal pattern. You have a gap on the left side. You have a gap on the right side. And once you break this neckline here, there's only one thing to do. It's got to go a lot, in this case, to make it a top, it's going to go a lot lower, and that's what it did. If you got caught long here, whatever, you should have stopped and reversed as soon as you took out that low right there. So then we went down, 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 and let's see. Then we had a bounce into this the other day, and now let's get to the bottom line here. Let's see. We're going to move ahead now and take a look at when I was on your show on the 16th. I also alerted the folks that on the 29th of the 22nd, Mercury would be turning retrograde, and here we go. Here's Mercury retrograde. It was last night at 8:18 p.m. last night Eastern time. All my times are Eastern time. If you're in another country and don't know U.S. Eastern time, that's New York time. Same thing. So there we go. Here's 8:18 p.m. What did the market do there? Okay, we have here's the box here for the, here's the low. Bottom occurred at 8:38 p.m. Eastern, U.S. Eastern time on the S&P 500 futures, 2617. There it is. There's your Mercury retrograde at 8:18. It was off by 20 minutes on a cycle that occurs, every 120 days. 22 minutes out of 120 days. I think that comes out to about 1/100th of 1%, in terms of error factor. So that's pretty good, I think, There's your 5-minute bar chart on the S&P 500 overnight. And then we've had a big, as you mentioned, we had a big reversal. I did these charts at like 7 o'clock in the morning when I had some guy called me from China and wanted me to go on the show. So there we go. So there we go. Here's the low here, on the 1-minute bar on your S&P 5 E-mini. And there's the bottom right there at 38, and our Mercury retrograde was, there was the bottom there at 38 after 8, and our Mercury retrograde was 20 minutes earlier, So there we go, and we've had a big reversal overnight. So if you want to, if you don't ever call me or whatever, then you just got a great forecasting tool that when these planets change trend, and they change from direct to retrograde, it's a great forecasting tool.
Well, listen, thanks for joining us, Norm. We'll have you on again soon. I believe you're scheduled for March 28th. Is that correct? In 5 days?
That's correct. Next Wednesday, because we got big stuff coming up here at the end of the month.
Okay. Well, we'll be watching. Thanks for joining us, buddy, and we'll talk to you soon.
All right. Thanks a lot. Have a great trip over there in China.
Yeah, so far so good.
Okay. Maybe carry out some food for me, right?
No, they don't have take home here. Well, they do, but not often. Anyway, thanks for joining us, buddy. We appreciate it.
Thanks for having me on. Feel free to call me. Maybe you can put up my contact information there in case anybody wants to get a hold of me, right? You have my contact info?
They'll certainly put it up.
All right. Thanks a lot. Take care.
You bet. Thank you, folks. Okay, folks, let's take a quick look here. We've got another couple of minutes. Someone's asked a question about the gold market, and boy, I'll tell you, I still believe, I'm a little hard-headed, but I still believe we've got a chance here for this larger pattern to come down. But boy, gold has had one heck of a run. You'll notice here, we'll put this up so you can take a look at it. The last time I was on, we were completing a 3-drive to a bottom down there where it says last support. You'll notice the ABCD pattern was absolutely spot on at 1305. And boy, we took off like a ruptured duck. And look at what happened. We pulled back to a 382 retracement yesterday. In other words, the market ran up, $30, $34 right to the harmonic number, then backed off to a 382 with a perfect ABCD pattern. I highlighted this in a video when it was making that, saying this could be a very important low, and it was. And you can see we've already started moving up. We've hit 13.48 so far. I think we're going to hit 13.54. The $64 question is this the start of the really big move? And my answer to that is, I don't know. And the reason why I don't know is we're seeing a tremendous amount of divergence here in something that we follow all the time, and that's with the silver. And if you'll notice, silver has just basically gone up to the retest that 78% level around this 1365, whereas gold is, completed and expanded on any of these things. And if we look at the XAU, we're seeing the same type of a thing. I don't have that chart quite ready, but yes, I do. Let's hold on here just a second, and I can get it up here. I believe, yeah, here it is. You'll notice that this chart is still, get it up here so we can look at it, it's still lagging very, very badly. So my assumption is that we've still got a chance here, even though the jury has got the ballots filled out. They might read them on Monday morning if something crazy happens, but we'll get plenty of chances to get in the gold, folks. It trades as nice as anything we look at. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to switch over to the foreign exchange markets because we've got something pretty exciting happen here right now. Let's just get this chart of the Canadian dollar here versus the U.S. dollar. We made a high up here at the 131.30 level just a few days ago. The 24/7 service that we have at TFNN went short at 131.15. That now has a $3,000 profit in it. And our profit objective here is at 115. That could be well over 20 grand if we hit it. Now, if you'll remember, those of you that were in the program, we sold it at that 136 level and covered it at the 123 level, which was well over 12,000 in that move. So we're looking at here. The margin on this, folks, is not that high. You know, you're looking at about a $2,200 margin. You know, with a profit potential like that and a risk, well, our risk now is we've locked in a profit, but the risk on this originally was only $400. So they don't always work like that, but this one, you know, lined up perfectly. If you look at this really closely, you had a beautiful ABCD structure coming in exactly where it should have come in, and it just rolled over, you know, very, very nicely. They don't always do that, of course, but that's one that looks relatively good. So keep in mind that that sometimes they work and sometimes they don't. We'll have to just wait and see. I know, folks, you keep asking me about the gold and silver, but I really don't know. I don't do anything with fundamentals. I checked the open interest. Nothing looked dramatic in that yesterday. So the key is if we get this gold to close above 1357, you know, and we're trading at 1347 right now, I could certainly, you know, have to, well, I haven't eaten any crow because I'm not short, but I'm not long, and I want to be long. I really wanted to be long at 1288 to 1285, but we didn't quite get to that level, and that's one of the things that I was really looking at to see if it was going to be the case or not. So that's the main thing that you want to sort of keep in mind here. But the fact that this Dow Jones stopped where it did when Mercury went retrograde, and that's why I asked Norm to come on, is because, you know, he's talked about this many times to us, and it's certainly done everything that you could possibly ask for as an indicator, you know, for short-term trading. And boy, it's called some major turns. Whether this is a major turn or not, I don't know, but we've rallied 37 handles in the S&P in a matter of about you know, 9 hours. So that's a pretty good run. And, you know, just since we came on the air here, we've rallied over 14 handles. So that's a pretty good sign that we're at a really, really key level. The Canadian dollar is starting to break even more as we speak because of the news that came out on Canadian exports and some other GDP figures. But we'll see if that's going to make any difference or not. But the pattern does look lower in all of those. The one that is the most interesting, well, they're all interesting, of course, but the one that is very, very interesting, of course, is the fact that we're looking at this, the fact that these bonds and notes actually rallied. I guess it was on a flight to quality because of the Dow being down 700 points. We rallied back to that 145 level again in the bonds, but boy, that's a dead cat bounce, folks. These interest rates are going higher. I know they didn't go higher right after the report, and that's mainly because they've been down so far, and you want to be able to say that there's about to be a bounce in here, and we've had the bounce, but it didn't follow through. We couldn't even take out the previous day's high, and now we're down a full handle from where we were yesterday. So that's the main thing. But we're living in exciting times, as the old Chinese curse says. So we'll watch to see how some of these things you know, unfold here. Okay, let's take a look here at a couple of things. The Dow Jones Industrial Average, I just want to give you a heads up on a really important level to look at. We're 100 points away. That's at 24,200. Watch that level extremely carefully. And the reason for that is when we hit that level yesterday, we had a very nice rally of 250 points from that level. So that level means that's an old low to a new high or to a retracement high, so that'll many times act as a magnet. So at 24,200, that'll be a very, very interesting thing to watch. Now that level in the S&P comes in at, we just hit it, well, not quite, 2660. We're trading at 2655 right now, so keep an eye on that that S&P. We're now up on the Dow Jones. We're now up 400 points, folks, off of the bottom we made last night when Mercury, went retrograde. We rallied 400 points from that level. That's a very significant level because, you're down 700 and some on the day, and if you took 2/3 of that back, you'd be right on it. And that's exactly a 50% retracement of the high we made yesterday before we came on unglued at 24,500 in the in the Dow Jones Industrial Average. So keep an eye on those. Those are the ones that are going to be really, really interesting to look at. At least that's the way it looked. That's the way it looks like early this morning here. But we're having really good swings. The Dow's moving 50 points in about 2 minutes now. So that's the kind of stuff that you would be liking to look at. Now, someone's asked a question about Facebook. We talked about Facebook getting down to that 165 level. It hit that level. That was a big ABC that was there. And I believe that we've got a chance for Facebook to rally this morning. I don't know if it's rallying yet, but it has a pattern that completes that says we should rally at least 15 points up to about the 170, it's around 8 points, up to around the 172, 174 level in Facebook. So Facebook is, even though the news is very bearish and it's turned down, so we'll see what's going on. Okay. I'll try to cover December corn when we get to the other part of the break, but there's some of these other things that I think are relatively really need our observation here right now. And one of them, of course, is Bitcoin. I wanted to show you we've had a big rally here in Bitcoin off of this 78% level. And I know some of you folks do trade this. You've asked me about it. But if you'll notice that level, we also had an ABCD pattern. We came down for 5 days. We rallied up for 4 days and then came down for 7 days. And right at the 78% level, we're now trading a little above 8,500. And I think it's got a chance. But, boy, if we take out that low at 69.90, this is going to be lights out over there. That'll be a really quick failure. And it means that we could be going down a lot lower. But that's a very, very important number at 6,900 in the Bitcoin. Remember, in late January when the Merc, brought this out at, I think it was almost just a little under 20,000, it looked like there was never going to be a downtick. And now, we've given back, 13,000 points, 12,000 points in just a little bit of time. So we'll see. Someone's saying that the cost to mine a Bitcoin is 7,000. Boys and girls, I have no idea what that means. And I know it has to be related to energy, but that's beyond my pay grade, so I'm not able to really talk too much about it. So main thing. One thing that we did talk about last week was the fact that, China with these things that we've had with these controls and everything, we've had a situation where, it was very, very bearish, to certain commodities. And we've had a big drop in the hog market that has continued down. That'll all work itself out, folks. This is not the end of the world when it comes to this. That's just negotiations between countries. 877-927-6648. Stay tuned for December corn.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're going to get back to talking here just a second about the corn market here, because we're getting ready for the planning intentions report coming out here towards the end of the month, and it'll be very interesting. We'll have Simon Lee on for that, and also our good friend Rich Anderson. Right now, we've got Christmas corn is trading around $3.93 for the December contract. That's a very good support down here. That's the 61% retracement. The problem is, folks, it's a straight down move. There's virtually nothing of a bounce of any kind, so you don't have multiple numbers coming in at that point. You basically have a 78% level from the February low and a 61% level from the January low. So that should be strong support at 391. But boy, at that point, if it breaks that, you could be looking at a new low coming down here and decent corn coming into this report. Now, the soybean oil is looking much better, as is the soybeans. They're acting better, and the wheat's still holding up. But right now, the key point is this corn. So you'll notice the high that it made. It had several major patterns up there, the last being a 3-drive pattern. And then, of course, it was in the midst of that weather market. And as soon as the rain started in Argentina, the market started to really roll a lot over. So we'll see what's going to happen. This early morning strength that we had so far in the stock market stopped pretty close to where it should have, at least beginning. But it's going to be real interesting, because if we close really badly today, folks, this sets up for a very, very negative day, coming in on Monday. I'll go through that in the newsletter over the weekend to show you what I'm looking at to see how that's going to happen. But we've got some big things going on in some of these markets that should be watched very, very closely. As a matter of fact, I think what we'll do right now is just to give you a heads up on one of these, because it looks so really interesting here. In fact, we came very, very close to the exact number, and that was in this Australian dollar. I've already pointed out the pattern we had in the Canadian dollar, and you'll notice that the Australian dollar has made since January of last year, in other words, 18 months ago, it's made 3 major Gartley patterns, and we're completing the 3rd one right now. The first one came in May of last year. The second one came in December of last year, and now we have another one coming in that came within about 30 pips of the exact low down there at 96.45. So that's very, very close to that. So watch it, because if you get there, that's a very low risk trade. That's got everything in it that you can ask for, boys and girls. You've got two ABCD patterns. You've got the 3 drive to a bottom pattern over since middle of February. And then you also have a 78% retracement from the low we made in December. And if you go back and check the 78% retracement from last year's low in May, it was exactly 78%. So keep an eye on these currencies. They're having some huge moves. And remember, you know, when these things take off, they don't take a bus full of prisoners with them. They leave everybody, you know, at the starting gate. So keep an eye on some of these things, because they have some huge moves, and that's the real important part of what we're looking at here. Now, I wanted to bring up one other market, because this is for April cattle, but you know, April cattle are not ready yet, because you know these will be coming into delivery very quickly. But we'll be watching August cattle, because this is cash cattle, what we're looking at right now. You'll notice we made that resistance up there at the 127 level. There was a 3 drive pattern, as you can see. We stayed there for 3 days. You know, almost exactly at the 78% level at 127.50, and then down we've come. And you'll notice that the price objective on this is down about 115.50. That's 12 handles in cattle. That's not that's 5 large. So that's a lot of dinero, or as we say over here, renminbi. So we'll see how this works out. Someone's asked a question about the real estate here in Hong Kong. There's 3 words for it: high, high, and higher. Location matters a little bit, but boy, there's just so little available out there, because the Chinese government allows people to come into Hong Kong with citizenship if they if they buy a home, and you can't buy anything for, you know, under $1 million, and that's something really, really small. I'm talking about the size of a medium-sized woman's closet in the United States. So it's pretty expensive. Okay, we'll see what's going to happen in here on some of these other markets. We'll watch it. But if we make new lows today, and the Dow Jones and the also the S&P, if we go below those key levels, boy, that's not going to look good for Monday, folks. It really isn't. There's some historical stuff that's a little scary. And the fact that we're right over this Mercury retrograde is enough to make anybody's hair pull out. That's assuming that you have a lot of hair, which leaves me out of that class. But we'll see what's moving on some of these others. The interest rate situation looks, we are going higher in interest rates, folks. It really doesn't make any difference on these small rallies. A longer term, the chart is just so very bearish, and below 141 in those treasury bonds sets up a really, really bad thing, because you're going to be breaking a long-term trend line that's held for over 30 years. So watch that without, you know, it might not happen right now, but when it gets to that level, it's going to be something really big. Now, whether that's related to China buying our treasury bonds, you know, because of these tariffs that are going on or not, no one really knows. But this is where we're going to see some really wild volatility in here. So that's the main thing that you want to keep on watching, is to see how some of these things, you know, actually hold up. We've already dropped 18 handles in the S&P since we started, and well over 100 Dow Jones points from that level. So we'll see. This is not looking good right now, boys and girls. It really isn't. So we got to pay attention. You don't want to just be really careful being long if you're long overnight on Monday or into Monday. That doesn't look good. I'll try to explain that a little bit later. The Treasury bonds were trading around 144.18, not a big deal. But if we ever get those up to 146, I think that would be a present that would be wrapped with about 9 different ribbons saying Merry Christmas. So 146 in the Treasury bonds would be, I would believe, I'll get this chart up to show you what I'm talking about, would be a really good, let's see if we can get it up here. Almost, yeah, there we go. Let's get it up here and we'll take a look at it. And that would be a really nice Christmas present. So we'll watch. We're trading pretty much what this chart looks like. This was sent out on Monday. This was the chart from the newsletter that we have as we're watching some of these other things. Okay, someone asked me a question about the number of people. Yes, there are a lot of people here. This, I think it's about 8 million, but it's a lot larger than Manhattan. So it's just the central area and Kowloon that is very, very busy. That's where all the businesses, and it's right on the Sea of Japan. Oops, let's try that again. The South China Sea, and that's it. You can see Macau here from a clear day, and most of the days here are relatively clear. They get very little smog. And what's interesting about Hong Kong to me is that you can get in a taxi and go a very long distance for $5. For that same cab ride in the UK, it's going to run you about $50 and up. I mean, it's just amazing how these cars move around here without too much trouble. And the MTR, for $3, you can go anywhere. So in transportation is a good value. 877-927-6648.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and someone's asked me a question about the importance of what we're looking at in these markets, and the only thing I can say to you is one of the things that we really focused on in the newsletter last week, let's try it again, is this chart that comes from our good friend Jim Bartolioni. You'll notice here that we made a 1.618 expansion from 1974. Hello. We also made a 1.27 expansion of the move from 2000 down into 2002, where the market gave back 85% of its value. Both of those came in spot on at the exact level of 75555, and that was the high, so within 0.001%. So that could be a major high. We'll have to understand what's happening. But the key today is to watch the close. If we close strong, that means we've got a really good chance here to do some pretty good movement to the upside, some more rally. But if we close very badly today, you're going to be looking at something that is going to be it won't rewrite the history books, but it's going to be exciting no matter what, no matter how you look at it. That's the way I would view it. So keep in mind that today's close is going to be very important. We must close strong, and I mean strong is up at least 150 to 200 points. We're up 400 points, more than 400 points from the bottom right now. So pay attention to that. That's another one that looks, really quite interesting. So just keep in mind that that's something that we could be looking at without too much trouble. You see. So we'll see if that's going to be the case or not. But it'll be interesting no matter what. So right now we're up almost 100 in the Dow. So that'll be an interesting thing to keep an eye on. The Nasdaq has come back to be just about unchanged on the day. The S&P is still up. So all of those things tell us that we should be at a level that will be, very, very interesting to keep an eye on this morning. So that's it. So live every day in an attitude of gratitude. Goodbye from Hong Kong, and have a wonderful day. We'll see you on Monday, 877-927-6648.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
No matter